Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to continue our discussion on parabolic trade opportunities. And one of the recurring questions that came out of the last couple of videos was discussing the day zero setup. And I've talked about this in the past. A lot of my learning, my advanced learning that really helped piece a lot of things together came from Peter Brandt, who's a classical chartist, Edwards and McGee, Schabacker. I had those early in my education, and those books really were glued together by Peter and his methodical master craftsman approach, but his explanations really resonated with me and allowed the pieces of the puzzle to click. And so a lot of the patterns, I talk about price always being in a box, and we're just going to expand on the parabolic trend trades. We'll go through a few examples, and then again you can go back and test this. But the critical nature of this is that these are easy identifiable setups for me to recognize, whether it's over 3 days, 3 sessions, and then again just looking for the simple, easy to recognize setups. So some traders have asked questions about why didn't this do that? Why do you think this is going? This is going to go there and all that? I don't care what the markets are going to do. I have no idea what they're going to do. I could care less. I don't look to predict or think where they're going to go. I'm just looking for the setups when they show up each day, and the easiest to recognize repeatable setups. And I'm going to reinforce that with today's videos. The easiest thing to do is to go and look at the chart to see if there's an easy to recognize opportunity that could eventuate into a best trade setup in the session that you're trading. And for me, that is mainly New York. I look at Asia, but only if there's a setup. And typically that will come over day 1, day 2, day 3. It could be day 1, day 2, day 3, day 1, day 2, day 3 again. So let's take a look at these types of opportunities. And one of the charts that Peter talks about being one of his, I suppose, favorites to trade is the rectangle, and I agree with that. For me, the rectangle is the easiest trade setup to recognize. And Monday to Friday, we will often get 3-day rectangles. We can get 3-session rectangles, but they will eventuate in certain instances into parabolic opportunities within a session itself. So often we can get a session that can, for example, when our day starts, Asia may put in a peak formation high, and over the course of the day, London may then put in a peak formation low. And then we may see the market go into consolidation. And this often gives us our boundaries now for a rectangle, which can turn into a measured move. It may not be a range expansion. It may be a parabolic type of opportunity, though. So we have our peak formation high, peak formation low, consolidation for a possible blow off vertically, and that may be in the downward direction, or we may get a market that goes vertical in the other direction. So this could be an example of peak formation high, London's put in the peak formation low, and the US becomes our trend trade out of that range. Sometimes this can occur over 3 days. This could be a Friday, this could be a Monday, and this could be a Tuesday. We can have this on a Wednesday, Thursday, Friday. There are all kinds of scenarios, but in terms of talking about a 3-session parabolic opportunity, if you step back and are able to identify peak formations, you will see this pattern recurring over and over again, whether it's in the upward direction or in the downward direction. I'll come back to my mantra that hindsight pays, because this is what allows us to come to the chart, regardless of what may, we tend to look at a lot of information on the left, and it's a down day, it's first red day, it's 3-day breakouts, and we have that thesis already. So if we come back to our hourly chart, we take a look. We had a large move down on Friday from the high of the week. So we already know we're into our new week. It's Monday. We talked about this on the weekend. We have a Monday to Friday template, but we have the beginning of a new week. We had major red news in the U.S. session today, which typically is not that common on a Monday, but let's just go back to the process of identifying peak formations. We have a peak formation low that forms in Asia. So again, this is not a peak formation. We have a market that's fallen down and it's broken higher. So that confirms our peak formation low in the Asian session. We then have a market that makes a peak formation high in the London session before breaking down and taking out the higher low. So we now have what's considered to be our geometrical structure for our rectangle heading into our US session. Now again, we can take a look and we see major round numbers, double zeros. We've broken a previous day's low. And we also now have a market that has gone into consolidation. Peak formation low, peak formation high, consolidation for a possible trend trade coming out of our day zero setup. If we go to our universal 5-minute entry criteria, we had major red news at 8:30 a.m. New York time. And now we have our entry after the news for our trend trade opportunity coming out of our geometrical rectangular structure. If we put our range expansion on the bodies, body to body of our geometrical structure, our rectangle, we have at least one full 100% full expansion of the range as a potential target. In simple number terms, we're basically looking at a 50 to 75 pip range expansion. Reinforce to look for cherry pick trades. This trade setup will show up over and over again. Canadian dollar today, peak formation high in Asia, peak formation low in the London window, and then our consolidation before the US window. And again, we had major red news on the calendar. Peak formation high, peak formation low, trend trade outside of our consolidation. So again, a geometrical structure and a 100% range expansion of our rectangle. And you'll also notice again major red numbers from 50 through the double zeros for approximately in the area of 40 pips. Gold gives us a peak formation low in our Asian window. Again, you'll notice the double zeros, then a peak formation high in our London window before dropping down and consolidating up near the high of the day. Lower low, lower high. That is the formula for our pump and dump. You will also notice that this is a breakout from the previous day's low, and our peak formation high comes back into that breakout. We're breakout traders from other time frames, long in the new day, but we have our geometrical structure, peak formation high, peak formation low for a possible range expansion. We have our universal entry criteria met after our major red news for our trend trade continuing back down through the low of the day. Breakout, pullback, peak formation low, peak formation high. There's our geometrical structure and our rectangle for our continuation trade short. Oil, we can do the same thing. We have a market that is trading inside of a peak formation from the previous day's US session. No peak formation in Asia. We just have a narrow consolidation. But we get a peak formation that goes up to the high, lower high of the gap time in our London window. So we have a peak formation high that breaks down and makes a lower low. Peak formation high, just tighten this up, and a peak formation low. Market then proceeds to go into consolidation, but breaks down, keeps breaking down. We're down below the double zero box. We've broken the low. That lower low, lower high becomes our setup now for the pump and dump For the trend trade, breakout pullback, just put our 5-minute charts, 3 pushes up in the New York Open for a vertical move back down through the low of the day. So important to understand the geometrical range expansions and the peak formations, because that is the 3-session parabolic opportunity. This consolidation is what coils the volume for a potentially explosive move. We had a market that had already broken out of the previous day's low. We triggered breakouts, pumped back up into the breakdown, and again, major round numbers. You can go back and study these also. This is an hourly chart, but this shows up several times in the weekly templates also, day 1, day 2, day 3. We can see these at the beginnings of months. So again, we talked about this in the timing cycle. A new month, we can see a potential rectangle. We have a peak formation high on our Tuesday. Market trades down day 1, day 2, day 3, and reverses, giving us our peak formation low and the consolidation inside. So this becomes a larger rectangle, but we have our consolidation into the new 3-day template as a new week starts. Day 1, day 2, market splits, and day 3 begins our new trend trade coming back through the previous peak formation high. Dump and pump. So again, 2 types of trades, dump and pump and dump. Rectangles, larger geometrical structures, everything is fractal, so you will see these same setups show up over and over again. Day 1, day 2 is our consolidation, and day 3 in the new week, new template, breakout pullback continues the trend in the long direction. So study these setups. They will often eventuate into parabolic opportunities. Sometimes they will just trend and grind. But again, understanding the directional bias and the opportunity in the session that you're trading will help you identify which instrument may offer you the best bang for the buck in that session, whether it's a session scalp or a 5-star scalable best trade setup opportunity. Keep it simple, traders. Focus on the best trade setups. Lock and load 1% better every single day, and may the markets go with you.